Hello traders, this is Trader K. I'm back with a new video. Today is 31st December, though you will be watching this video on the 1st of January of 2021, and today's topic is Gann angles, the true Gann angles. Well, I've been seeing some videos and articles on the internet on how to draw Gann angles, and what I have seen so far, it's absolutely wrong. What people are doing is not how W.D. Gann used to draw Gann angles. What they did is they took a bottom and make an angle of 45 degrees and say this is Gann angles. Another group of people, what does is they anchor the Gann fan. Let me open up the Gann fan tool. They anchored the Gann fan from a low to a high, and they say that this is an important angle or the 45-degree angle. So all of these are actually wrong. Why? We will see what W.D. Gann has told us and given us instruction on how to draw it. So first let's get to the book. So here I have opened up the Master Stock Course by W.D. Gann, and this is page 122, how to draw angles from a low point recorded by stock. This is a place where the instruction is given on how to draw these angles. So the first and the important geometrical angle, 45 degrees or 1/1 angle. Let's read it, what it says. The first and always most important angle to draw is a 45-degree angle or moving average. So what W.D. Gann is meaning that a 45-degree angle is like a moving average. So let's continue. That moves up 1 point per day, 1 point per week, or 1 point per month. This is a 45-degree angle because it divides the space and time periods into two equal parts. As long as the market or a stock stays above the 45-degree angle, it is strong position and indicates higher prices. You can buy every time a stock rests on the 45-degree angle with a stop loss order 1, 2 or 3 points under the 45-degree angle. But remember, the rule never uses stop loss order more than 3 points away. So Mr. Gann by himself gave you a trading system which is not perfect, but it is a system that you can use with combination of your own system. So let's draw a 45-degree angle. Remember the rules. An angle that moves from the origin point 1 point per day, 1 point per week, or 1 point per month. What it means is, which means the angle should move 1 point per day consistently. So that makes an angle of 45 degrees. So let's go back to the charts and let's see how can we draw it. So I have opened up McDonald Corporation's chart, and let's take any spot and draw a 45-degree angle. Let's do it from here because this is a kind of important low to anchor an angle from, because you can see the market was in a consolidation period and then it broke out and never get back into the period again, right? So let's draw an angle from here. So the rules were 1 point per day. What we do is we anchor a point from the absolute bottom, and let's draw a line. Let's say 100 days. Let's draw 100 days. Okay, so from here the price we should see 100 point. So the anchoring point will be this low plus 100 points. So let's see where is this low. So the low is 87.5. So we have to anchor this to 187.5. I just added 100 points to this date. And now we see that the angle has gone straight up. So in these cases we would take maybe half point a day or 0.25 points a day. So let's take 0.25 points a day. So I have just calculated the anchoring point with the formula of 0.25 points a day, which is 112.5. So it seems, 1 second, 12.5. So it seems that our angle, drawing the angle, is exactly what the price followed while it actually went through this angle. But first I want to show you something else. Let's say, so we draw the angle from here to here, right? And then we extended the angle. And now if we zoom out, we would see that the angle actually from this point it went to the territory where price did not move with the angle. So what it means is angles have expirations. When the price actually breached here and went through a lot far, then the angle that we draw from this bottom is actually expired. So now we wait for a new low and draw an angle from there. Like we can draw an angle from here or here. But let's take a close look first how the price did, at least till here. So what W.D. Gann said, when price rests on the angle, if you see price resting on the angle, you can go long with a 1 or 2 point stop loss. right? So this, you can see that if you have followed his instructions, you would have make quite good money, right? If you entered here, it doesn't matter where does you exit, you would always make profit. It's here, 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 and another one is here. It's kind of, we see here, the price is actually walking on the line. So it's kind of meaning that it is time that price will break this line. So because this line is drawn for a very short time, so it expired very fast, right? So now I want to show you few more angles on the same instrument. So let's open up those angles that I have already drawn for you actually. So this is one angle that drawn from a very important bottom, and you can see that price was actually acting very well with these angles. One thing that you should have noticed by now that I haven't anchored the angles to any low or high. I actually added points from the point of origin. So this is how the angles should be drawn, which I already showed you some proofs from W.D. Gann's own writings, right? You can see here how it acted as support. This is a flaw and it has a reason to it. If you had the time cycle dates, you would have easily got this. You would have easily bought the stock or commodity or any forex pairs. So at around this area there is a low, so you would have waited for a low and bought around here. So if you buy this stock from here, you see how this stock actually rallied. It made a very good trend from this point. So I have few more angles drawn for you. I'll show you the calculations also, but first let's see an weekly angle. As you all know, weekly trends are stronger than daily trends, right? So this is a weekly trend, and I have converted the chart from daily to weekly, and now we see another chart with these angles drawn from here. So it also works pretty well, right? It is also drawn in the same principles that was written on that book. So let's see one monthly angle. Let's open up. So this is how a monthly angle would look like. You see here acting as support, and from here price reached out the one by one angle, right? So the stock is very bullish from here. So if you align daily, monthly and weekly angles together, you have a very good system. All you have to do is align these 3 time frames and use the time cycle dates to get in or get out from the trades. So if you would have done that, you would have made a lot of money from this one instrument only. It is a lot of data that we have used for this instrument to make or draw these lines. For the instruments or tools WD Gann used, you will always need more data than other techniques. The calculations are here actually. For the daily trend line or the angle, Gann angle, I used 500 days with 0.25 points each days. Again, the weekly one is 1449 with 0.6 points a day plus the low. And for the monthly period, I used 6,000 days. So with the help of this video, you can have a very good idea about how to draw these angles. Now, is this it? Is there anything else to these angles? Yes, there is a lot of things that goes with this angle thing, because these angles are actually connected with the time cycle pivots. So that is how WD Gann forecasted the price of the stock or commodity to penny. So if you want to use it the correct way, you need time cycles. Okay, so where do you find the time cycles? Only spot where you will find the time cycles, the cycles WD Gann used, is in the book Tunnel Through the Air. Okay, so this is that is the book where you should be searching for the time cycles. There is one more very crucial information that I want to give you about these angles. Is there are a lot of angles, right? There are 4 angles here and 4 angles here, but notice that the 1 by 1 angle is the only one angle which actually is the divider of 2 triangles inside a square. Let me draw a square first. So let's say this is a perfect square, and 1 second, let me hide this angles as well. So this is the only angle that cut the square into 2 exactly equal sized triangles. That's why this angle, the 1 by 1 angle by itself, is more important than other angles. Remember a rule, straightforward rule. If stock or commodity is above the 1 by 1 angle, it's bullish. There is no catch to it. It's directly bullish. And if it is below this angle, it's bearish for that time frame. And also the angles should have to be updated. If they expire, you have to draw a new one. In this case, this angle is actually expired at this position, so we have to draw a new 1 by 1 angle, right? So this is how you know which stock or commodity at what position it is bullish or bearish. Only the 1 by 1 angle is the indicator of bullish and bearishness. No other angles like 1 by 2 or 2 by 1 angles are the indicator of bullishness or bearishness. It is only the 1 by 1 angle. You have to remember this. This is a crucial information for you to have. So this is the first video of the year 2020. So I wanted to give you something valuable. That's why I waited for this day, and I am sharing this information now. These angles are very, very powerful if you know how to use it. Study that the Master Stock Course, and everything written about these angles, and then you will be able to get enough informations. Though I gave you enough information to how to draw these angles, but I think you should do your own study. Then you can actually start to use it in your own instruments that you trade on. Again, let me remind you that you will have some whipsaws. You will get cut or stopped out in these positions. So to be safe, you need a time cycle to help you so that you do not get caught in these positions. So let's think about a scenario where you have the time cycles working and you also have these angles. So let's say you have access to a time cycle like W.D. Gann's real time cycles. So suppose these are the pivots of the time cycle, and you have drawn this angle from this point. So at this point, let me rewind 1 second. So from here, we have a low, and we see the price is resting on an angle. Which angle? It is a 1 by 2 angle, let's say. So now, and it is definitely above 1 by 1 angle, so the stock is bullish. So on the buy date, we would like to place a buy or long order, right? From here we wait till, let's say, 14th September, and let's see. So let's say we are out from here. Then again we have an opportunity to go short. We have another pivot on this day, let's say 22 September. And let's go forward. This, I wanted you to see this. This is a very crucial day for this stock or commodity. People who do not, traders who do not have access to this time cycle theory will actually not understand the value of this pivot. This is a high pivot. Generally, these high pivots are above lines, these angles, right? When we see market pivoting high and it's below, or the angle is giving resistance to it. So this clearly means that the change in trend for at least mid-term or long-term is very, very near. And we see what price actually is around going up and down this angle, and finally it actually went a lot far from this angle. Right? So this is how you can have better understanding of your stock or commodity if you have a time cycle working on the instrument. So this is it. I think I have given you a lot of informations on how to use these angles, how to draw them, and you can develop your own techniques or strategies on how to trade this. So this is a very, very good system that you can use. It doesn't matter what type of trader you are. You can definitely use these angles. They are very, very powerful. So goodbye traders, and have a very, very good time with you and with your family, and have a great day.